Let me just start off by saying I've been in the oil industry since 1979. So probably before a lot of your listeners were even born. And I would say the last 2 years are the most turmoil I've ever experienced. I've seen some ups and downs before. We've had price corrections. We'll talk about them later. But after a few months of turmoil, we've always returned back to a stable kind of OPEC-led situation. But now there's a real sea change. And I think all of us in the oil industry are a little bit like deer in the headlights, right? We are really wondering what's going to happen. So in terms of the last few months, prices seem to have recovered to about $60 to $65 a barrel. And remember, I'm talking WTI. That's how we work in North America, and it's all US dollars. And everybody here is hoping for a stabilization and somewhat of a price recovery. My view is, and this is just my personal opinion, is that in the foreseeable future, the prices will stay between about $40 and $65 a barrel.
That would be a nice price for a lot of producers at the moment.
It will be, but it will also mean a lot of the more expensive producers will actually have to consolidate or will, go out of business. No, that's remember that. Sorry, Joe.
Yeah, go ahead.
The other point I'd like to make to your listeners is that I've always lived in Alberta. Alberta is a province of Canada, and most people know the city of Calgary from the 1988 Winter Olympics. And Alberta's economy, we're very much a petro state. 35% of our budget is paid for by oil and gas. And we've always had a very thriving oil and gas industry. And so we are in a huge state of transition, and there's lots of empty offices downtown Calgary. A lot of technical people have lost their jobs. So in Alberta, which is perhaps unique compared to other more diversified economies, the impact is huge, and we are hoping that we'll get more stability, but there's a lot of consolidation going on in our industry.
Oh, that's interesting, and I think your views reflect what is going on across the industry, where people are worried because of what has taken place over the last couple of months and probably still going on. I think we have seen companies saying they will still continue to cut off people, to lay off people, so to speak, in the next coming months. So it's still a wait and see kind of a situation. But I want to go back to your story. I want to find out, when did you get into oil and gas industry, and why did you even think of that as a career when back in the 70s or 60s?
So for me, it's been a wonderful, wonderful life. I'm one of those fortunate people, and apparently I'm in the minority, who knew what he wanted to do when he was 14 years old. I knew I wanted to be a geologist. I was born in South Africa, and I loved the African bush, and I wanted to work outside, and I loved earth sciences, physics and geology and geography. And I was blessed to have parents who could afford to send me to university. And I was lucky enough to choose a career in which you can actually have a very good career in exploration. You know, some people might love bats or ants or spiders, and they can get PhDs, but you can't really make a good living, right? So geology and exploration is one of those, you can pursue your passion and have a good career. So I started off in mineral exploration, and then because of the apartheid system, I decided I wanted to leave South Africa, and I was lucky enough to get a job in Canada. Mm-hmm. And I really wasn't that interested in the oil industry until I got into it. And then it was found out how incredibly exciting it is. So to me, it's the stakes are very high. The technology is amazing. The risk management is very important. It's very dynamic. It's very rewarding. And at the time, before the so-called energy transition, everybody loved oil and gas.
In fact, I was about to ask you that, I mean, compared to when you got to the industry, What would you say are some of the major differences between when you got it into the 70s and 80s and now? Especially if you think of a young person who is thinking of this industry as a career.
The big difference is that any oil and gas professional, even if you didn't have direct education, if you were even interested in it, you would be hired. There was a shortage of people that the industry was growing so fast that they hired almost everybody. And then they would train you. So we had fantastic training. We had 10 days a year of mandatory training, technical, financial, management. So think if you're 20 years, you have 200 days of training. It's like going to university again, being paid, right? So most people, when we joined the industry, we knew nothing about the oil and gas industry, and the big companies, Gulf and Exxon and Shell and Total and Eni, all trained us to become proficient. Nowadays, it's very difficult to get a job in the oil industry. In fact, in some sense, it's quite sad because oil industry has almost now got a reputation like the tobacco industry, and it'll change. But I think now people think of oil companies transitioning more to an energy supply, where oil and gas, I think, will always be a part of the future. But as you know, I think in order to get the job now, I think to be an energy professional is more important than be an oil and gas professional.
But don't you still think that we still need the hydrocarbon resources now, even if we are in the movement towards, so to speak, clean energy?
Yes, my belief is two things are going to happen. The one is that the transition has started. I think anyone who doesn't believe that is in denial. And renewables and even nuclear and hydrogen and so on, I think will be part of the mix. But I think if you look at the physics of oil and gas, the energy density, the safety of transporting the product, just how much energy it carries in it, that I think we will always need oil and gas. And I've spoken to a lot of people, engineers particularly, who are busy in this transition, and they estimate somewhere between 40 to 60% of our energy mix will always be fossil fuels. And I think what the fossil fuel industry is doing now is trying to decarbonize their industry.
That seems to be a very big word right now. You know, it seems sexy to decarbonize and be clean and everything. But let me take you back to the topic of the conversation that we want to have, and why I really wanted to have you here is that there are a lot of people who have asked me questions in terms of what they need to start an oil and gas company. And this will take you to your transition from being a professional employee to an investor. What made you make that move from, getting to investment in oil and gas?
So when I started my industry, I really wasn't that interested in the financial side. I was really a technician, geology and geophysics. And then I was fortunate enough, about 10 years into my career, to be appointed the exploration manager for a large multinational for North America. And all of a sudden, I found myself signing some very big expenditures. $10 million for a well, $3 million for a seismic program, and so on and so forth. Our budgets were $200-300 million a year, and I was authorizing lots of expenditure. And I thought, I better understand if I'm signing these and I'm creating value for the company. I don't really know how I'm creating value. The key question, how is this, when I spend $10 million, how do I know it's going to create value? So I got interested.
That's a very good question to ask if you want to start a business.
Absolutely. And I find a lot of professionals don't really think about that. They'll say to me, oh, I drilled a great oil well. I say, why is it a great oil well? I say, it's producing 500 barrels a day. I say, is it making any money? They go, I don't know. That's someone else's problem. So I started to get interest in money, and I started to do some courses, investment courses, securities courses, accounting courses. And I started to talk to the people in different departments, in treasury, in accounting, in marketing, in sales, and I started to understand the value chain. We take $1 from an investor and we make them a promise to turn it into $3 or $4 or $5. So how do we try and achieve that? And I found that it was very interesting.
That Tom must have been a major mind shift for you.
A total mind shift. And it was about a 2 to 3 year process to get my head around all the different moving parts. And what I found, Joe, it was very interesting. In fact, it's mostly about human nature because it involves ambition, involves greed, involves fear, involves excitement, it involves risk. The accounting is just the numbers.
I don't know whether you watched the movie where I think I can't remember the guy's name, where he says greed is good.
Greed is good. That's Wall Street. Yes.
Yeah, Wall Street. Gordon Gekko.
Gordon Gekko. Greed is good.
Greed is good.
And so I really found the finance first of all very important if you're going to start a company, if you're going to be a manager, if you're signing if you're spending anybody's money, you better understand what the value chain is and how you manage risk. That is the most important criteria. Because investors will take risk. They understand that in order to get a reward, they have to take a risk.
True.
And the bigger the reward, the higher the risk. I have tried for 20 years to fool that equation. Low risk, high reward. It never works. So most investors have a mixed portfolio. They'll have some low risk, low reward, but they'd like 10% of their portfolio to be in high risk so they can have a high reward, especially when interest rates are so low. So they will, as long as they believe that you're managing the risk, they will give you their money to invest and try and create a reward, well, for them and for yourself, right?
But even before we get there, Thomas, before you get to the level of where now you're talking to investors and I am trying to get their money to be able to carry on with my program, there is the basics for, let's say, for me as a beginner. How do I even start, or what are the key elements that I should have when starting an oil and gas company?
So when you talk to oil and gas entrepreneurs, I find that there's two end members. And then in between, there's graduations, right? So the one end member is, I don't have to know anything about oil and gas. It's just another business. I can be an accountant. I can be an investor. I can be a banker. I can be a social worker. It really doesn't matter. It's just another business. And then on the other side, there are people, and this is where I fit, is people who say, no, to be successful in oil and gas business, you need to have some experience. You need to understand some of the technical aspects. How is oil and gas formed? How do we find it? What technology do we use? How do we drill for it safely? How do we know how big the reservoir is? So I believe you need to understand some technical basis. And my experience is if you get the technical part right, you're managing 20% of the risk right there. But
there are others who would argue that if you don't have the technical knowledge, then you can be able to get the team together.
Absolutely, you can get it. So let's just go through the other components. So you need some technical, right? The second thing you need is you understand finance. You have to understand how to raise money. So if we're talking about an upstream company, which is exploration through to production, upstream companies are, especially in the early stages, before you have some production, are funded purely by equity capital. Equity is selling shares in your company, right?
Yes.
So venture capitalists and people who expect a higher reward. So you have to understand how to raise money. What's the game of raising money? And especially if you're going to be a CEO, that'll be your primary objective. Your primary objective will be to go out and convince people to take money out of their pocket and give it to you rather than to solar energy or wind energy or the next version of Google or everybody's or Uber or whatever it is, right?
With a promise that probably you are going to do something better with the money.
You have to make it. You have to make an inviting offer. So that to me was the biggest transition I had to take from being a technical person to being able to raise money, because I didn't want to. You can't be a snake oil salesman. You can't lie. You can't promote it beyond what you think it is, but you still have to sell it. So you have to find that sweet spot where you really believe in your prospect, you're honest with the risks, you say something big upside, and you get the investor to feel excited. So going back to your question that you started with, the big change between pre-2020 and now is that most of the equity money is quite scarce right now. People have become really, because of this decarbonizing, and they really are, the pool of money that was available before is now much smaller. So you have to even work harder to raise the money. And we have to change the story, but we'll get into that in a moment. But the other thing
go on.
Go ahead, Joe.
No, I was about to talk to something, but then you have not finished, so it's okay.
The other thing you need to be concerned about is this new thing we call ESG, environmental, social, and governance. All the tipping point was about last February, when all the big banks said, unless you have an ESG plan, we will not give you any money, or your cost of capital will be expensive. You can have our money, but it'll be expensive. Now, what I've come to understand, Joe, is it's not that these bankers, the Gordon Geckos of the world, have suddenly become altruistic and tree huggers. What they've done is they're saying, we recognize now that you need a social license to operate. Whether it's because you're moving, because people live there, or because there's drinking water, or because there's new legislation, or there's the Paris Accord. So they're saying, yes, we can see you technically you're good. You know what you're doing. Financially, you've worked the numbers. But now we want to see a plan so that you've mitigate the risk of any disruption due to protests or bad governance or new legislation. We have to build that now into our risk management. And that's the big, big change. And in fact, you'll see if you look at a lot of jobs that are available now, they're looking for ESG specialists, ESG advisors, emission specialists, climate risk specialists. It's not that they're stopping to look for hydrocarbons. It's just that they are realize now that social license and environmental planning is a part of the new game. So it's more complicated now than it was before.
To raise money.
And the final thing you need to be aware of really is the capability of your company. You mustn't take on projects that you don't have the capacity to handle. You know, if you're a small company, you can only really take on small projects. So I found that quite a few companies, they get ahead of themselves and they'll take on a big project because it's so exciting. And then number one, they're undercapitalized. Number two, they can't find all the people they need to do the technical work. Number three, the infrastructure and the above surface is unmanageable. And then they get into a situation where they really are stuck. So sizing the project is very important. And if you're a small company, start small and then get bigger and bigger and bigger and manage the growth risk, right?
I think we have seen a number of those in the market who have probably, chewed more than or bitten more than they can chew. And that has had a catastrophic impact on the project and probably even the countries and the people the projects were supposed to assist. So yes, would you say that is a consequence of getting more, or probably the collapse of the prices, or maybe they had their meats long?
I think, probably all of those, Joe, because there's what's happening now. The world is changing so fast now. Even if you take COVID out of it, it's very difficult to make 20 and 30-year business plans. You see, before this, before in the last 10 years, OPEC would stabilize prices, and the world was fairly predictable. The only thing that changed the price of oil was a war, especially in the Middle East, right? Now with all the different products on the market, all the different energy sources, the changing politics, it's very difficult to make long-term plans. So it's quite easy to get in over your head. Now, one thing I found very useful, and your listeners might too, is there's a whole new way of doing business now. It's 10 years old. It's a movement, and it's called the lean startup. And I think you're familiar with it.
Yes,
and you
yes,
create something called
a
minimal viable product. So I think you do the same with an oil and gas company. You start the minimum viable oil and gas company. And then you can adapt quickly. You can be agile, right? You need some new green technology, you plug it in. Prices drop, you turn off some valve. It seems to me that that's what the oil company has to do. And in Alberta, in Canada, we're experts at that. Because we built a whole segment of the oil and gas industry called the junior oil and gas startups. And that's how I transitioned to startups, is going from a very big company to an intermediate company to very small companies.
So you started as a junior?
Started as a junior, so raise the money. And what they expect when we raise money is they expect us to put our own money in the company. They call it skin in the game. So if I mortgage my house and put all my savings in it, then they know I'm going to come to work every day and I'm going to be thinking about it 24 hours a day. Right?
And you won't burn the cash as you would if it wasn't yours.
Exactly. So they expect you to put some money in. If you come to them and say, well, I really believe in this company, it's fantastic, but I'm not putting any money in, they'll say, well, I don't think you really believe in it then, right? So you have to be prepared to actually have some skin in the game. And then you also share in the upside too. But that's the first requirement they'll want. They'll want to see, well, are you putting some personal money in the business?
And I think what you have just mentioned is something, and probably this may require a whole hour to discuss. Is something that probably myself sitting in Africa, we don't seem to have that infrastructure for junior and small cap kind of companies in oil and gas industry. So maybe that's something you could help us in Africa to think about.
That's a great idea. And in fact, you do have pieces of the infrastructure. And there is a whole modularization of the industry, which just like your mobile phone business, where you could in fact start creating something that suits your environment, right?
Yes.
That's something we'd love to help you with. It's something we've been thinking about, and that's why we think the Alberta model is so appropriate for East Africa, for example. And in Nigeria too, they're moving to marginal fields because they have some infrastructure, right? But I think it is possible to actually create a junior type industry, and I also think the size of the pools you have are very suitable to it.
I think that would be a very interesting topic to discuss, and we will take it up one of these days. But I want to get into to your thoughts, or what you have learned, or what you learned from the experience of building a company, and probably what, if I want to build one, what kind of advice would you give me, or what should I look for?
So if you're going to build a company, you're going to be the CEO and the president, right?
Yes.
As you said, you can hire everyone else. You can hire the technical people, the financial people, the ESG people, and all the lawyers you need to do it, right? So as the CEO, the first thing you have to do, in my view, what I've learned is you have to make sure you're going to be committed to it. So you have to ask yourself the question, why do I want to build a company? Because my experience is it's a more than full-time job.
That reminds me of Simon Sinek.
The why question.
The why question.
Right. And in my case, the why was easy in terms of oil and gas, because as I said, I always loved geology and geophysics and exploration, but it was a more complex question when I went to the whole financial side, right? Do I really want to do that? Do I really want to put my skin in the game? That's quite stressful, right? Do I really want to talk to investors? Do I really want to worry about risk reward all the time? Do I want to supervise all these people? It's a whole stepping up of the commitment and the stress. In the end, I decided I did, but it was a progression. So from
including the stress of the price movement in the stock market,
including the stress of the price movement, the stress of all the regulations, the stress of being sued because of we were in one of my companies I was working in, we burnt down a rig. We had an explosion. And we were very lucky nobody died, but we had insurance and lawsuits. And so you have to cover all of those things as well, right? And so for me, it wasn't like a step function. I had to learn all the pieces until I was convinced that I felt I was capable.
You know, when you talk about some of those risks and problems and challenges that an entrepreneur faces, most of people will not see that side of a business. We always see, you know, CEOs and entrepreneurs in grocery magazines covers, you know, showing how much wealth they are creating. But for example, that example of a burning down of a leaf, that's a little challenge.
Yeah, so I found that the rewards were tremendous. I mean, some companies worked out well, some didn't work so well. You don't win every time, right? I found the challenge of the intellectual challenge was wonderful, but I had to do it at the right time in my career. I had to do it when I felt I could actually manage all the different pieces. And I did have some sleepless nights, but I also had some wonderful highs, right? Where the whole team comes together and you drill a successful well, and then you go out and celebrate, and the company's share price goes up, and there's just nothing to replace that feeling now. So but if you have to, it's also a temperament thing, right? I have found that some people are risk averse, and some people need risk in their life. They need the adrenaline, right? It's like the same reason people jump out of airplanes, right? Or climb mountains, right? And other people play golf. So you need to make sure that you have the temperament, the ability to handle all the ups and downs. And in my view, I would recommend that, in fact, you have most of the skills you need to. You don't have to do it, but you have to understand when you're hiring good people. You have to know what questions to ask.
So basically what you're saying is that you need to understand yourself first.
Well said. Very well said. You need to understand yourself first. In fact, you must do your investors a favor. Understand yourself before you take their money. Because if you're learning about yourself while you have their money, well, it
can go either way.
That's not what they want to pay you for, right? They want to pay you for focusing on the task at hand, right? So that's the first thing. You have to ask the why question. And if at the end of the day you still, so what's your purpose? What's your core belief? And I think a good way to do that is to create a vision statement for your company. Mm-hmm. Something that doesn't exist now, but you want it to exist in 5 years. So my company will be a leader in the energy business by doing what? My company will provide energy to every village in Turkana by doing what, right? Now, the important thing about vision statements is they're aspirational. You don't have to actually achieve it, but they're an aspiration. Okay, because if you can achieve it, it may not even be a vision. That's more like a mission or a statement, right? Mm. So for example, I've worked for a company where our vision was to produce oil from reservoirs that were too difficult for other companies. So we would take the oil that had been discovered but wasn't being produced. And to achieve that, we signed an agreement with a very big French research and development oil and gas agency, because we didn't have the brain power, but they did. They didn't have the operational power, but we did. So we paid them a royalty so we could get access to the technology, right? And the investors really liked that. They said, oh, you guys have a nice vision. You're actually thinking about it. So here's our money. So
I think you have just described a sort of a collaborative approach, which probably is very important to somebody thinking of building a business.
You know, Joe, I'm glad you brought that up. The oil and gas business is very, very collaborative. You cannot produce a drop of oil without having access to the mineral rights, having the government on board, having someone to sell it, having people to produce it, having someone to drill for the oil, someone to find it. I speak to so many entrepreneurs, oil and gas people, who say, well, I found the oil, or it's my company and I did this. It's totally collaborative from start to finish. Plus, to manage the risk often, we'll bring in a partner. Because we may want something, but paying 100% of everything is too expensive.
So even partnerships become a risk mitigation
all
strategy.
The time. Yes, we call it farming in or farming out, right?
True.
So we'll get the prospect and we'll say, we want. In fact, I think risk mitigation is the best way to be successful. You know, having 100% of zero is not very good, right?
It's not very good. But 100% of something big is equally very good.
So I mean, I think being humble, it's very interesting. Being confident but humble is important at the same time.
Do those really go together?
They do. If you put confident and humble together, you're not arrogant. And I found a lot of entrepreneurs, and I hope I didn't do this myself, but the minute, I always say, when your boss is on the cover of Fortune 500 magazine, time to sell the company, right? Because then they start to believe their own stuff and they stop asking the right questions. I've worked for people who've got prizes and awards, and I'm telling you, it changes. They move from being confident to being arrogant.
It is always said that you should never believe anything that is written about you. At least it keeps you grounded.
That's right, keeps you grounded. And I think you can be, I think a part of confidence is actually staying humble. Because you need confidence. You need to believe in yourself. You need to believe in your prospect. If you're doubting yourself all the time, you'll never drill a single well. Because, you know, even in Alberta, where we have 300,000 wells, the average success for a wildcat exploration well is 1 in 12. So 11 dry holes.
You said you have how many wells?
300,000.
I think we have done less than 0.001 in East Africa.
That's why you have.
It actually means we have a long way to go.
Yeah, so that's why you have a wonderful future to consider. If in fact you can get, and you have the opportunity to build on all the mistakes and learnings of all the industry before you. I mean, it's incredible.
In fact, that was my next question: is what mistakes should someone avoid when building an oil and gas company?
So, one of the biggest things,
or better still, Tom, how many mistakes did you make? What kind of mistakes did you make?
You know, Joe, when I started my consulting company, we were going to call it, our slogan was going to be, we've made all the mistakes you're going to make, so call us, right? But we didn't think that was a good marketing say. So the biggest mistakes we make, the biggest mistake most people don't realize with oil and gas, and you will really understand this, is how long it takes before you get your first production and your first cash. It's not like a hamburger store, right? Where you build it and then it takes anywhere from 5 to 20 years before you get any kind of cash flow.
I think you are absolutely right, because if I was to use Uganda, which is my neighbor to Kenya, they discovered oil in 06, and probably there's a time that we are getting to the stage where fast oil is becoming a reality. Same came with Kenya. We discovered oil in 2013 and it's still not yet to the market. Well, we have
So the
tested it,
question
but
is, yeah, so the question is, how do you stay alive as a company? Because if you keep going back to your shareholders, they start to get a little angry. Oh, come on, you want more money, you know. So a lot of oil and gas companies will start off, juniors, by buying some production, which sounds kind of strange, but you buy some production or you get some wells, you can do some, you start small, get some cash flow, raise a little bit more money. So cash management is one of the things which is very important, keeping the lights on. And you know, the same thing, I think, I think the same, you know, if you look at East Africa, some of the companies that have been there for a long time have now gone because it was such a long time before. So that's one of the biggest things. The other thing is, I think most of the things that I've underestimated, or my companies have, or the people I've worked with, is we've underestimated the complexity. You know, you can get 99 out of 100 things right, and the one thing can stop you. Like, so for example, in Canada, one of the big issues are Indigenous people's rights. We have lands, Indigenous peoples, and the industry for a long time just ignored that. They just wanted to build pipelines, and right now, those people are stopping multi-billion-dollar projects because for so long, Canada never really took it seriously. Now they're starting to negotiate and do things, right? So the complexity, because when you get the oil out the ground, it has to go on the surface. So you need so the complexity is very important. And from that point of view, what I found has been very good in the companies that have been successful is before we get too deep. So we've asked the why question. Now you got to ask the how question. So yes, I'm the perfect fit for an oil and gas company. I got it. I want to do it. I'm committed, right? Then the next thing is, well, how are we going to do it? Are we going to be upstream? Are we going to be midstream, downstream, service company? Are we going to be a broker, like helping companies work together? There's the oil industry. One of your talks, Joe, I listened to it. You gave a very good talk on Africa is not a country, right? It's a continent, right?
yes,
Africa is not a single story, right? Same with oil and gas. People use oil and gas as it's a monolithic story. It's very segmented, and so you've got to choose your segment, right? So the how question then is, what do I need? So what kind of team?
That means, Tom, if I was to circle back, that means you need to actually first also understand the entire value chain, so that then you can figure out where to plug in.
You know, Joe, I'm always surprised. I'm teaching a course on oil and gas value chain, how few people understand how the value, in fact, part of my training was to understand how the value is created. And it's not just putting the money in the bank, right? So I thank you for saying that. That is perhaps the number one requirement, is understand the value chain, because it is regulated. When you find something and produce it, between the accountants and the regulatory engineers and the securities exchanges, they'll tell you what the value is. You'll have to take what you've discovered and put it in their boxes. And the value chain is quite complex. And you may think you've created great value, and then you haven't. So thank you for saying that. And then you can't. Only the big integrated companies can play the whole value chain. A small company has to pick a segment of the value chain and then make sure that someone else wants what they produce, right? So then you have to have your cash model. So for example, if you're going to be, let's say, a junior oil and gas company, let's just say, okay, well, how do I get access to the mineral rights? Which basin do I choose? How do I know there's petroleum down there, right? What kind of wells do I have to drill? How deep are they? Are they expensive? Are they dangerous? Are they cheap? Are there any surface facilities? What are the legal issues? What is the surface disruption? And now these questions can all be answered. Our industry is very well established. None of this is rocket science, right? But you have to do it. We call it due diligence. And that then out of that then falls your what you're doing, which is your strategy. So the mistake that when I've been involved with companies where we haven't had a systematic process of identifying the issues, doing the risk mitigation, then coming up with a strategy, and then the implementation. If we haven't done that systematically, we've been caught. When we've done it systematically, we've always been able to anticipate it, manage it, kind of squeeze our way out of it, and carry on, right? So it's really important to take that vision and build it, make it as granular as you need to do in order then to have a good chance of success.
You must have enjoyed the journey, your oil and gas journey, because right now you told me when we spoke earlier that you have retired, and probably maybe, and you tell me, or you may say it or not, maybe you are enjoying the fruits of your hard work in oil and gas.
Well, you know, I've enjoyed it so much that I retired for 5 or 6 years, and then I came back because I love it so much, right? The big difference with retirement is I can choose who I want to work with, and I can choose whether to stay or go, right? When you're working professionally and you have a mortgage and lots of requirements for cash, sometimes you have to stay in companies you're not so happy with, right? So
that's a very interesting thing for you to mention, because I think a lot of people in the world today don't have that luxury of choosing who to work for, whether to actually work or not. And again, this is given maybe what we have underwent, the crisis the industry has undergone, and a lot of people have been laid off. So I want to throw a spanner in the works and ask you, what would you advise somebody who has lost a job and maybe they haven't gotten to the level of retirement? How can they navigate this particular period as they look for opportunities?
Well, this question you're asking is very personal for me and very close to me, because my youngest son was a geophysicist working for Eni in Milan for, well, he didn't start there, but he was in the industry for 15 years. And then he got laid off in 2016 because of the crash of prices, right?
Yes.
So he's having to reinvent himself because the geophysical jobs are almost zero in North America. So I've been alongside him, trying to help him and support him while he's tried to redefine himself, right? And it's not an easy journey. But what he's discovered is the first thing he did is, well, what do I know and what are my strengths? So for example, he knows the oil and gas industry. So oil and gas, as I said, it's not going away, right?
True.
So that's something he has. He also has pragmatic experience. So who could find that valuable? The next thing, what's he good at? Well, he's good at physics and math. He was a geophysicist. So he's good with numbers. Well, everybody needs numbers, right? Whether you're an accountant or climate risk specialist or whatever, if you're good with numbers. And the third thing is, he then sat down and said, well, where's the industry going? And what he discovered is that the whole green, renewal, decarbonizing, putting politics aside, right? It's happening. So he suddenly found he has 3 things that are now needed. He has an understanding of the industry. He's good with numbers. And so he specialized he did an MBA, number 1, to understand the value chain. And he then he'd become an ESG specialist, climate risk, because that's where the jobs are coming up. So my advice would be 2 things. Number 1, don't deny what's in front of your eyes. Okay, if the trend is moving in some direction, there's no point in shouting into the wind. You know, you may not like it, you may not agree, but if the trend is moving, that's where the jobs will be, right?
So what you're saying is that if a door closes, if you have lost a job, at some point you have to accept that it has happened.
That's right.
And then maybe sit down when you have maybe gotten over the shock or whatever, and now
Yes.
figure out what it is that you have.
That's right.
That you
So
can
the big
offer.
shift, yeah. So the big shift that has happened is, and this is the way I look at it, is there was a time when companies would employ people because they just wanted bodies. You know, we'd keep you for 20 years, we'll train you, we'll employ you. That doesn't seem to be the deal anymore, right? Now what they want is they want to see how you're going to help them create value. So you have to understand their value chain. You have to understand, then you have to sit down and say, okay, if I work for you, I can help you create value in this way. Then they will got a better chance of hiring you because they're not interested in filling bodies anymore. So they want people who can create value.
If I hear you right, Thomas, and that's very interesting because I was reading somewhere that the then CEO of Apple, Steve Jobs, and even other tech companies are very good at promoting entrepreneurship, whereby the employees are almost co-creating with the company. So if I hear you right, what you're saying, or what you would advise someone is, you need to start thinking not necessarily that the company owes you a salary or is supposed to do things for you. It's whether you can, in a small way, become a partner in creating value with the organization that you want to work for.
That's exactly right. It's now a value transaction, right? So they really want people who can, Joe, the basis of capitalism has not changed. There's still the need to deploy capital.
That's the fundamental principle that supports capitalism.
That's right, and there's capital available. So if you want to work in a specific industry, you can understand how capital is deployed and how they use it to grow. If you can then figure out how you can come in and make the company an offer of how you can help that process, they would embrace you, right? Because that's what they're looking for. They're not looking just for desks to fill and to follow orders anymore. Okay, they want people who can come in and say, boy, do I understand your business? And I've seen this, and I've looked at your annual reports, and I've studied this, and my competitors are here. And you know what? I think you're missing a niche, and I can fill that niche. And you know what? Why don't we start working on a probationary basis, see if we like each other? And then that way, so you have to have almost like the way I think about it. I think about an actor, who wants to play in a movie, right? What do? They do an audition, they study the roles, and they get chosen because they're the best person for that movie. In fact, that's what someone said to me now. You really don't need a resume, you need a portfolio. You need something which they can see how you can be an asset to the company. So that's going back to my son, that's the new skill he's had to learn. He's had to learn how to network, how to promote himself, how to think about value creation. And he's finding that now quite an exciting journey, right? Thinking more like an entrepreneur than a geophysicist.
So there has been a mind shift in terms of how he thinks in terms of going forward.
So one thing, just circling back to one of the earlier questions, how I made the transition, the company I was working for at the time, Gulf Canada, got a new CEO, and he reorganized the company from functional units like exploration, production, into business units. And I was made a manager of one of the business units, like a profit center. So I had to make money, whereas before I had to find oil and gas. Now I had to make money.
So your business unit became a profit center. It had a P&L.
That's right. And that's how my performance was measured, right? And that helped me then. And then once I could do that, I said, but you know what? I'm in this big company. I've made lots of money for them, and my remuneration hasn't changed. Plus, they are not offering me security. So I'm going to go to a small company where I can get some stock options. And so that was that transition where I learned the business kind of in a safe environment. And then I went to take some risk, right? So always manage the risk, right? And so same here, my son has had to learn to transition to this new world where you're not really an employee anymore. You're kind of like, as you said, a partner, right? And had to learn these new skills, and it's not that easy. So I feel a lot of empathy for the younger people who are transitioning. I was very lucky, you know, had different. So, but people who are prepared to actually think of themselves as either entrepreneurs or intrapreneurs, I think there's a great future for them.
And that takes me to what, as we wind up this conversation, is to what then do you think, according to your experience, and you can draw from what has happened in the past and now, what do you see, or where do you see the industry going in the next 5, 10, or even, as some have talked of, 50 years from now?
So I have a vision, and I like to create visions, and I believe that.
Do you have a vision, or like Martin Luther King, you have a dream?
I have a dream. Yeah, that's right. I have a dream. I do think, Joe, after having visited 99 countries, driven around a lot of continents, and I do think that business does need to be more socially conscious. While I still believe the profit motive will be the #1 driver, I mean, you just have to look around whether, if we just even forget climate change, you know, there's too much plastic in the oceans, right? There's too many poor people, right? I think business has to shift from being purely profit driven to being more holistic about the health of everything, right? You know, it was the Chicago School, Milton Friedman, I think, who wrote that in 1970, wrote a paper that business only had one responsibility, which was to increase shareholder value. Mm-hmm. And that moved business into this shareholder value thing, which we've been using very successfully. But having a single focus meant something else has paid a price. So I do believe, and the younger generation is very, very keen on this, is that business does need to have some governing, right? We can't just. So I think the oil industry is now responding to that too, right? And I think of ESG then not as a punishment, but as a way of making us more sustainable. And so I think the future oil and gas company will be, first of all, much more kind of holistic in its thinking. What are the consequences, you know? And the other thing is, I think there'll be energy companies. I think they'll be selling electrons. And my view is just like mobile phones. This is my dream, especially for Africa. So let's say you have a town somewhere or a village somewhere, and you want to get electricity there or energy, right? I think what will happen is a company will come in and do an energy audit. Oh, you have a waterfall here, you have good wind over there, you have some sun here, and look, you can get gas over here. And they'll build a energy supply which is appropriate to that particular, what the sources of energy are. Just like now, if you want to buy a car or build a house, you get something that's appropriate for what you want. And I believe they may not even
for you.
Sorry?
You can have it customized for you.
Customized, yes, beautiful. And I even believe there may not be a world price for energy. There may be a local price because of what you have, right? So just like with cell phones, where we've gone from landlines now to kind of distributed, phones, and banking is the same now. I believe in 50 years' time that there will be these customized energy supplies. And sure, we'll still need the big companies to do global supply and scale everything up. We still need the Googles and the Facebooks of the world. But I think there's going to be much more energy customization.
No, it's interesting because you mentioned something that on a conversation I had with Jasper, the vice president for BP in Africa, talked the same thing, that they are looking at being partners of you know, in the energy ecosystem.
Yeah, because I think we'll be selling electrons. People won't really care where they come from, right? But I think the transition is healthy. I think I'm excited by it. Now, people may look at me and say, "Well, you're retired, so you can be, right?" And fair enough, I'll accept that criticism. But I think that, and especially the younger people I speak to, they're really on board already, you know. So I think there's a great future, and I think especially for the continent of Africa, I have lots of ideas I'd like to discuss with you, where I think we, you know, you can customize things, and actually I don't see it as a one way or the other way. I think there's a third